Hi everyone, I'm Laurel Marie Hickey. Welcome to What's Blank, Got to Do With It. Today's What's Blank topic, fixed. So what's fixed got to do with it in the financial industry? So when we say fixed when we're talking with our clients, we can mean one of three things, and it can be really confusing. So I thought that I would explain a little bit about each one. The first category that we have are fixed income assets. So this is a very popular one when we're talking about investing because fixed income assets are a component of the overall portfolio. So a traditional portfolio, we have cash opportunity money, we have fixed income, we have Canadian equity, US equity, international equity, and alternative equity. So when we're talking about fixed income, we're talking about the fixed income component of your portfolio. Fixed income, there's a lot of different solutions, but the broadest ones are bonds, which are government bonds, corporate bonds, municipal bonds, foreign bonds, preferred shares, as well as convertible debentures. Those are the primary categories. So fixed income is definitely one of the main things that we talk about when we're talking about your overall investment portfolio and how it is invested. So when we are talking about fixed income investments, there are risks that are attached to those fixed income investments. There are 7 of them. Interest rate risk, price risk, opportunity cost risk, reinvestment risk, inflation risk, credit risk, duration risk. So when we are putting together a fixed income model for our clients, we really are looking at all these different types of risks. It's important for investors to carefully consider the risks that are attached to any investment. And certainly with fixed income, there are definitely risks that we have to review before we are to take on a position in a portfolio. It's important for investors to review the various risk factors when building a fixed income component of their portfolio, working with a trusted advisor, understanding the diversification and the risks that are attached to your current portfolio. And certainly we do see a lot of volatility for fixed income in an interest rate rising and interest rate declining environment. The second fixed term is fixed return. And so this is something that we are all fairly comfortable in asking, what is our return? What is our fixed return of our investments? Fixed return investments typically have a fixed interest rate, payment schedule, as well as a maturity date. And so all of this information would be in the prospectus of any fixed income investment that you have in your portfolio. So really when you are determining what the fixed return is of your investments, and these are primarily for fixed income investments, your prospectus will lay that out. It will also lay out what any of the risks are that are attached to you receiving this fixed return. The third fixed investment term that we talk about is fixed assets as it relates to real estate. So real estate, of course, is any land and buildings that you own. They can be your primary residence. They can be your vacation property. They can even be an investment property. They are fixed land that is not so easy to liquidate in a very short period of time. What's not included in fixed real estate assets on the balance sheet when we look at your client file are real estate investment trusts. They are not in the real estate fixed category. They are separate and they are part of the liquid investment category. And the reason why they're in the liquid investment category is because they can be easily liquidated. So a real estate investment trust, yes, it is real estate, but it is a separate category. So it has a different liquidity risk to it. So we put that on a different category when we look at your overall balance sheet. Another thing with REITs, we call them REITs for short, is while not direct ownership of a property, they do allow you to indirectly own real estate and income generating real estate assets. So it's an indirect ownership, and that is another reason why it's on a different category of the balance sheet. So whether you're a seasoned investor or a new investor, it can be really confusing when you have one word that describes 3 different things. So I hope I've explained a little bit more about what fixed means, as in fixed real estate, fixed income, fixed return. I always love your questions and comments. As always, please feel free to reach out to me. I'm Laurel Marie Hickey, a portfolio manager with 3i Global Wealth of National Bank Financial.